This video is an overview of DeFi opportunities on Stacks. Stacks is one of the leading Bitcoin layer 2s, which basically allows for smart contracts and DeFi to be built on top of Bitcoin. In today's video, I'll go through some leading applications that you can use to farm yield and airdrops on Stacks today. Welcome back to Dynamo DeFi. My name is Patrick, and before I get into the video, a couple quick caveats. First off, this is not financial advice. This video is purely intended to be for educational purposes. Second off, this video is sponsored by the Stacks Foundation. Now let's get into it. To start, before we get into the DeFi opportunities on Stacks and some strategies that you can use, a few quick updates on Stacks itself. So Stacks, if you don't know anything about it, is a Bitcoin layer 2, and basically that means that it functions similar to its own chain. It feels like its own chain. However, it's designed to inherit some of the security properties of Bitcoin, and with one of their upcoming upgrades, the Nakamoto upgrade, it should, in theory, be as secure as Bitcoin itself. And I made a video going into more detail on Stacks a few weeks ago, so check that out if you want a full overview of everything you need to know about Stacks. And I think the value proposition for a Bitcoin layer 2 makes a lot of sense, right? Because Bitcoin is kind of the foundation of the entire crypto ecosystem. However, the capabilities of what you can do on Bitcoin itself are fairly limited, and Bitcoin is really good at what it's designed for, which is being maximally secure, being maximally decentralized, being able to store value because it has a fixed monetary policy. However, if you want to build more complex applications, it's not really designed for that. And what chains like Stacks do is they allow more complex applications like exchanges, lending protocols, even new sorts of innovative financial use cases to be built and to be built on top of Bitcoin. And it's been gaining pretty good traction over the past year. If you look at the total value locked in the Stacks DeFi ecosystem, it's grown from around $64 million at the start of this year to $275 million today. And this is when you include liquid staked Stacks. And because the price of Stacks has also gone up during that time period, it's important to also look at this TVL in terms of the STX token. And you can see that this growth trend is actually even more clear, where it's grown from around 42 million Stacks at the end of 2023 to around 110, 120 million STX tokens today. So nearly a 3x in terms of the amount of STX that has actually moved into their DeFi ecosystem. And it's been developing rapidly, where they have a solid 10 active applications right now, and we're going to go through most of those today to talk about farming opportunities on them. Some other important updates on Stacks that happened recently is Grayscale, a couple weeks ago, launched a Stacks Trust. So this is a new way for investors to get access to STX or exposure to STX through a more traditional investment vehicle. Additionally, Stacks, if you watched the last video, you saw that they had an upcoming Nakamoto upgrade, and now this has been delayed a bit. It's still expected to come out sometime this summer. However, it was delayed because they wanted to add some new security features to be ready to go at launch. But this is going to be a massive upgrade because it's going to reduce the time on Stacks from being minutes for each transaction to being seconds. So it's just order of magnitude faster. And additionally, it's going to allow SBTC to be used on Stacks. So this will be a native bridged version of BTC that you can use in Stacks DeFi. And so I think all these applications I've shown you so far, this has kind of been like the test run up to now, because these applications have been built to use the STX token. But once you have SBTC live, you're going to be able to use BTC in all of them. So you'll be able to use BTC as collateral to borrow. You'll be able to provide liquidity for BTC. And I think that's going to be a massively appealing use case because it's the largest asset in crypto, one of the largest assets in the world at this point. And a lot of people who have it are going to want to be able to put it to work and to turn it into a yield-bearing asset. And then finally, one of the other implications of the Nakamoto upgrade is that Stacks will become much more secure. It's secured by Bitcoin miners, so it should, in theory, be as secure as the Bitcoin network itself. All right, and so let's talk about how you can get started using Stacks DeFi now. First thing you'll need to do is you will need to get onto the Stacks chain, and you're going to need a wallet to do that, a wallet that's compatible with Stacks. And there's a few good ones out there. Personally, I decided to use Xverse, very reputable wallet. Next thing you'll need to do is you'll need to get some STX tokens, because you're going to need to use STX to pay for transactions on the chain. And also, most applications we're going to talk about, you use STX in them. And if we look at the markets on CoinGecko, there's a number of major markets. I would say most major exchanges have STX at this point, so you can buy it on any of those if you like to use exchanges. Or if, like me, you prefer to bridge your funds directly on-chain to Stacks, then Stacks.co has a number of good bridges listed here. Although I will say that my preferred way to get funds onto Stacks is to use RocketX. RocketX, I talk about it all the time on this channel. I have no affiliation with them. However, they have over 100 blockchains on here. So basically, anytime I find a tough to access blockchain, it's almost always on RocketX. So for example, Stacks is listed on here. You can bridge funds from all these other chains over to Stacks. And so that's how I'm using that's how I'm getting my funds onto there. And then once I get STX on the Stacks network, then I'm ready to start using some of these Stacks DeFi protocols. And there's definitely some really good airdrop opportunities here today. So let's talk about some of these and some strategies. First off, we've got Stacking DAO, and Stacking DAO is the leading largest DeFi application on Stacks today by quite a bit, by a factor of 2x. And it's the largest liquid staking, or as they call it, liquid stacking platform. And one thing I want to note with this is, if you remember Jito on Solana from last year, we were talking about Jito last summer on this channel. That ended up being an extremely lucrative airdrop, because liquid staking platforms often end up having some of the most TVL of any application on a platform. And we got into it early before that many people were interested in that ecosystem. And so then when they eventually did an airdrop, those of us who had been farming it since the summer got a very nice payout, because we were some of the first few thousand people to actually be farming on that platform. And to me, Stacking DAO is kind of in a similar place now to how Jito was last year, because it's the leading liquid staking platform on a growing ecosystem. There's a few catalysts that I think are likely to cause new money to come into Stacks later, particularly the Nakamoto upgrade, SBTC, all these other things. And not only that, but Stacking DAO has an ongoing points program, which points means airdrop as far as I'm concerned. There's a few more users than Jito had, but yeah, they have an ongoing points program. So basically, by holding their STX token and by using it in DeFi, you actually earn points. And points means that they're almost certainly going to do an airdrop at some point. And to go through this points program a little more, because this is going to play into some of the other strategies we use on Stacks. If you're just holding STX, you get 1 point per day per STX. Great. If you use it in DeFi, you get 1.5 points per STX per day. And if you provide it as liquidity paired with STX in DeFi, you get 2.5 points. And it makes sense, right, why they have 2.5 points here, because you have to convert half of the STX to just straight STX in order to provide it as liquidity. So having the 2.5 points actually makes that worthwhile. And note the platforms listed here that you can currently do this on are Arcadico, Bitflow, Valar, and Zest. And we're going to go through each of these today, because you can use this STX to farm both some of these other platforms as well as Stacking DAO at the same time. So that's Stacking DAO. First place you can go to use it is Zest. Zest is one of the fastest growing applications on Stacks, recently up nearly 40% in the past 7 days, up 300% in the past month, now has $37 million deposited, and Zest is a lending protocol. And so what you can do on Zest, the pools fill up pretty quickly when they come open, but what you can do is you can deposit your STX on there. And that's pretty cool, because Zest also has points. So then what you're doing is you are farming those 1.5 points per STX on Stacking DAO, and you are also going to farm points over here on Zest. So you're getting access to the leading liquid staking platform, and the leading lending market, and you're doing it with the same set of funds, and you're actually getting boosted points on the liquid staking platform. So even better, right? You're farming both of these. Next place you can go to use it is going to be BitFlow, and BitFlow is a decentralized exchange on Stacks, and it's currently the second largest decentralized exchange. Alex is the largest, and we'll talk more about Alex in a bit because they had an exploit, and I think it still has some good farming opportunities. But BitFlow stands out at the moment for the reason that they have this phenomenal STXT reward pool, and so you can get that 2.5x, and in theory you can also get some APR from people who are trading this, although the estimated APY is TBD at the moment, so we don't know exactly how much that's going to be worth, but I think that this is another good way to actually put your STX to work. Also note that you have to escrow your funds here. So one cycle is 24 hours. You could do it, escrow it for one cycle, but your rewards are going to be higher if you actually escrow it for longer. And then the final place that I want to highlight that you can put your STX to work is going to be on this application known as Arcadico. And Arcadico is very interesting because what it does is it allows you to provide assets such as stacks or liquid stacked stacks as collateral to borrow or mint this USDA stablecoin. And right now, the status of this STX pool is closed, so you won't be able to access it, but keep an eye because you may find that it opens up at some point in the future. And this is pretty powerful because what this is allowing you to do for now is have a stablecoin that's backed by your stacks, so you can kind of use it as collateral to mint stables. But to my point earlier, once you get this SBTC on stacks, once the Nakamoto upgrade goes through, then at some point you'll be able to use that as collateral on here to mint a stablecoin. So basically we're going to have a Bitcoin backed stablecoin. I think that stablecoin could actually become quite large, given that the potential total liquidity for backing it in the form of Bitcoin is massive, right? Trillions of dollars. And so Arcadico is also an interesting one. All right, so let's now talk about a couple places that you can do some more traditional yield farming on stacks. And the two that I want to talk about are Alex and Valar. And we'll start with Valar, which is the smaller of the two. And so Valar is a decentralized exchange, and also interestingly, they're also building a decentralized perp DEX, which I believe is expected to go live when the Nakamoto upgrade actually happens. But in the meantime, you can still do some farming on here. So if we go into Valar, it's got all the functionality that you would expect on a decentralized exchange. You can swap between tokens, you can provide liquidity between tokens, and they have an incentivized farm right now. So they have this Valar token that they're using to incentivize liquidity, and then some other protocols are choosing to provide their own incentives. And as you can see here, the APY currently is substantial on many of these. For example, Valar paired with STX, you are earning 105% APY. So doubling your money over the course of a year. That being said, keep in mind that these sorts of tokens, including the reward token, are going to be highly, highly volatile. And also that yield is coming predominantly from inflation. So what you have to be careful of is protocols like this, $3 million, this is early stage. This could become much larger, and then the investment would actually be worth more than you had put in. The rewards would be worth more, but it could also fail to gain traction. And in that case, you might find that the inflation doesn't make up for the price. So that's just something that you have to be mindful of with these sorts of tokens. And I always say, don't go into something just because of the yield, go into it because you want to hold the token. And one thing I'll note here is that it does say Valar points up at the top. This points program is currently ended. So the token is live, you can earn regular token incentives, but you can disregard that points thing at the top. All right, so with that being said, let's talk a bit about Alex. So Alex is the leading decentralized exchange. For a long time, it was actually the leading DeFi protocol of any kind on Stacks, and it's still the number 2 largest. However, they've run into a bit of trouble recently, and specifically, they ran into trouble in the form of there was an exploit, and it affected about 4,000 wallets, and it looks like they're going to be able to return everyone's funds. They had this nice update at the end of May, and they have a few different options for how they're going to do this. But it seems like user funds won't be affected. That being said, it did shake many people's confidence in this protocol, and I'll say that these sorts of things do happen in crypto. So I haven't totally written off the protocol. It still has best liquidity on Stacks, still the leading application on Stacks, still has been building for 4 years. But that being said, I think that is definitely a headwind to Alex's performance in the future. If you still want to use it, despite that, then you'll find that there are several opportunities to earn yield in here. So, for example, you can pair Alex's native token with Stacks itself. You can pair a couple different forms of bridged BTC, or you can pair Stacks with either that bridged BTC or a bridged stablecoin. Now, note the yields on here are definitely less impressive than some of the other protocols I've looked at. And so given that, I think that, I would have a tough time justifying putting funds into here personally. That being said, it has some interesting tokens. For example, they have bridged BRC20s. And so some of you, if you have your BRC20s, maybe you want to bridge those and put those to work in a yield pool. And then the final application I want to talk about today is going to be Hermetica. I think that's how you pronounce it. And what this is a Bitcoin-backed synthetic dollar. So it's going to be a yield-bearing synthetic dollar protocol on Runes and Stacks, and advertises you will be able to earn 25% APY without leaving Bitcoin. So first thought with that is I say, okay, where is the yield coming from? Because 25% APY is extremely substantial, and it's very difficult to attain that sort of yield over a longer period of time, because you need to have someone paying it, right? Unless you're just doing inflationary incentives. And when I dug into it a bit more, what I found is that it's generated through the funding rate payments of short future positions, and they're pitching this as an internet native bond. And what I'll say to this is that these sorts of unique financial products in crypto that have high yield, they can last for quite a while oftentimes. That being said, eventually on a long enough time frame, the liquidity will increase enough to bring the yield down, or if it doesn't, then it probably means that the market is assessing that that is a reasonable yield to compensate for the risk of the protocol. So I wouldn't consider this to be risk-free, for example. However, I think this is an example, a prime example, in fact, of the sort of very powerful, innovative financial products that can be built on top of Stacks. And right now, it's still in development. That being said, you can join their waitlist at the moment, or you can participate in their Zeely quests, and they're giving out points for these quests, which I think makes it likely that there could be some sort of airdrop in the future. But these are things, for example, like submitting your Stacks address, taking actions on social media, and inviting friends to check it out. So I'll link this Zeely down in the description as well if you want to start getting involved in Hermetica before the app is fully open to the public. If you want to dive deeper into Stacks and learn more, I did a deep dive about it on my Substack not too long ago. I'll link this down in the description as well, and subscribe to the newsletter for more updates about protocols like this, because I have another deep dive about Stacks DeFi that's coming out soon. For more videos like this one, be sure to like and subscribe, and until next time, this is Dynamo DeFi.